Vincenzo's Gold Crypto Investing, where you like, subscribe, and share for a one-of-a-kind, company-made, computer software trading probability-based trading alert, technical analysis, and company philosophy, as I'm your most trusted source for blockchain technology and cryptocurrency breaking news and coin updates here on YouTube and in the cryptocurrency sphere, as old Vincenzo has brought back truth and, most importantly, integrity back into the trading sphere, right? And you can see what we got going on here and why I like looking at the volume indicator, right? You can see this is you can do this in a couple different ways. You can look at this in the logarithmic, or you can look at it in regular, but you can see regular, it flattens it out. You can't do targeted moves with it. It's very, very, very difficult to do. So I like to use logarithmic, right? But if we look back at the volume indicator, and you can see one of the key reasons why I like using this volume indicator so much. Look at this, right? Just look at this. Without even looking at the Bitcoin price, you can see if we bring out our industry exclusive drawing tool, right? You can see right here, I guess I can't use the drawing tool in here, but you can see right here, we got our pointer tool, seldomly used but much appreciated. You can see this right here in the pointer tool. You got all your volume traded right here. You see this between the 29,331 and 40,000. And then as you worked your way up to the all-time high, the volume decreased substantially as you worked your way up. But we were noting if you broke this 29,000, you didn't have much support until you got all the way down to 20,000 and really all the way down here at 17 to 20,000 was your next major area. So you could trade on the way down. You can trade within this zone straight through, and that's a big move down. And the conversely, on the way up, you can trade straight through that. So that's how we kind of knew that that was a major area. And then if you step down a little bit, you can see we got our major white support zone, which is the major volume area, right? Whenever you got these white boxes on my chart, that means it's a volume indicator area. And you can see that's all the way down near our target of $13,336, which is the middle part of this candle where it's mostly buy volume, where a lot of buyers should be. And then if you worked your way down deeper from 5,700 to 11,200, there's lots of buyers in there. That's why that major box is there, right? And then we had that major box to the upside. And then if we zoom back along towards the Bitcoin current price, you can see what we had here was a major, this is our area right here where we have our targeted move, 13,000. It's actually a little bit below $333, right about there. There's a reason we had that there, right? And then let's zoom out of this a little bit and put some more little horizontal rays up. Then we have this little marker right here as the previous all-time high wick. Bam, right there. See that? And you can see that's a major area. But the reason we have we've come out, and I'll get into a little bit what I had on this technical target, is after you had the blow off top, you came down a long consolidation for a few years. And then when you came back up, you can see you got rejected right up in that area, about $13,000. And then you had a pretty big fall to the downside for quite some time, right? We're gonna have to put since we changed the color on here, we're gonna have to make our drawing tool that color again. But we're gonna also have to do it like this, so it's not so big. So that's why we had this area as a major area, and you can see that's the top part of that white support zone, which makes beautiful sense on that volume indicator. So it'd make beautiful sense on the way down that we come back and retest that, right? See how that works? So then if we move along, You guys know what this is right here, right? Let's bring the chart back into the full view. You guys know what this is, right? You can see this is, we got our volume indicator down here. Let's bring these back into some focus, bring that up, and get up, bang, get up there. You can see our other little local volume indicator from the dump, the pre-COVID dump to the pump. But you can see this, bring our pointer tool back out. You can see this white right, the green line is right where the Fed and the liquidity dump took place in the stock market and the equity market and the rest of the deal. They had to start pumping, right? Like we talked about, that all within this area right here was all a Fed-induced pump between the green and the red. The red was once they started to quantitative tightening, right? But you can see now, if we start really working into this, let's take a look at what we got going on here. I wish when I was zoomed in, it would let me use my tools, right? But I don't believe it lets me use my tools when I'm in there. But you can see, here's how we started charting this when old Vincenzo came out, and here's how you technically trade. Old Vincenzo could see a rising wedge forming right here, right? You had your uptrending upper resistance, and we're going to make that, we're going to keep those in orange, but we're going to make that smaller, and then we're going to lock it, right? You see that? We had our uptrending resistance, and this is right when old Vincenzo started coming online. And then we had our uptrending upper resistance. You see that? And that's a rising wedge. And those are bullish continuation patterns, but bearish reversal patterns at the top. And old Vincenzo knew the targeted move was down here at the bottom of the wedge, right? And we had a target down at the 200 or the 200-day moving average in the maybe daily time frame, or there was a time frame down there that we had it on there, and then it hit it. And old Vincenzo back here, right, said this was the start of the bear market, a multi-year bear market. As soon as it broke that key uptrending support, we had a big flush with volume, right, and a big red candle. We told you that was the start of the bear market. And then we came all the way down 50%, and then we formed our next consolidation down here. You can see after the big flush and the candle wick, you had a nice consolidation with descending upper resistance. And you could have looked at this a few separate ways, but this was actually a uh, falling channel, but notice how it was facing and falling to the downside, right? We're going to lock those. It was facing and falling to the downside. So everybody thought it was going to break down there, but oftentimes these like to break the opposite way. It's a bearish continuation pattern, but oftentimes a reversal pattern at the bottom of it, right? To where it's a bullish reversal. So everybody thought this was the start of the next bull run. Really what this was the bear market, a bear market rally, a big bear market rally, right? You could say it was a bull market, but I'm not. I'm saying the bear market started back here because then you would have understood what was going on up here with this mountain double top. The rest of the field thought this was the start of a bull market. Really, this was just the start of a big, massive bear market rally, right? Let's make sure I got some plenty of time left on there. My phone's about to die. But that was a bear market rally, right? And then off that bear market rally, you formed a big rising channel. And there was your lower support uptrending and your upper resistance. See that? We'll make these a different color. So when we're referring to them, we'll make them a beautiful, it's kind of hard to see. We'll make it a very light blue. See that? Very light blue. And then we'll go ahead and lock it. And then we'll go ahead and lock it. And you can use this as a, oops, that's a clone. You can use this as a technical trading video, right? I trying to make one on my laptop, but my laptop's not cooperating. So I might just have to do it on my phone. But you can see that was a big rising channel, which is a bullish continuation pattern, but a bearish reversal pattern at the top, right? And that was just before the Fed started to talk about, but the market started to price in that the Fed was going to start quantitative tightening. Everybody could see it. Inflation was rising in the Fed and the monetary and banking system, and the gangsters and criminal gangsters and banksters couldn't hide it no more. And this was really the start of a of the second leg of the bear market, right? But I called the bear market started multi-year as soon as you broke this. And then when it came up here, a lot of questions were going on. Well, how could you pump 50% from the bottom, right? Well, or so 100% from the bottom, big bear market rally. And you notice you never closed, quickly got shut down up there and then reversed, right? And to me, that was the start. That was this midway, not even about the midway point of this bear market, right? And then you can see that I was diagnosing, sniffing out, and detecting, telling you this was a mountain double top one, double top the second one. And this is one of the most bearish macro patterns you can get as a targeted move from there is from the top of the head to the bottom of the neckline, which is down there, right? See that? And then you drag it to the point of a breakout. And that would be down here at the neckline. And watch where this targeted move gets you to. The targeted move gets you all the way down there to 13,641. And as you know, old Vincenzo has a target. Let's get this back in here of $13,336 by late 2020. And old Vincenzo was making that call. Old Vincenzo was making that call as we zoom in of that $13,000 was making that call all the way back here, right? All the way back here when were at 63, 64,000 and rising up to almost 70,000. But that's how you do that targeted move, right? You go from the top of the head to the bottom of this mountain double top, which is the neckline, and then you drag it to the point of a breakout at the neckline. And the point of a breakout was actually over here, and that gets you all the way down there to our target, or the breakouts from the neckline. I shouldn't have put it there. Now it's going to be nearly impossible to get it out. You bring it to the neckline, which is down there, and that gets you down to that $13,000 target. You see that? And then as we worked our way into the future, we had this big crash, right? You see that? We had a big crash here after we broke this rising channel. We did our technical targeted move to the bottom of the channel, and then we had a, and then you can see that you broke up, or you went into this long consolidation right here, and this long consolidation right here was a bearish continuation pattern, and old Vincenzo diagnosed and sniffed this out with our industry exclusive pointer tool in the middle of this, saying this was a bear flag, right? You had the opposite of this one. This had descending upper resistance and descending lower support, making the market think it was going to break down, and it broke up. This one had uptrending support and uptrending upper resistance, making the market think, and the rest of the charlatans and the snake oil salesmen and the moon boys, that this was going to go up to all-time highs. Old Vincenzo was telling you this was going to break down. And how you do a technical target out of that is from the top of the flagpole to the bottom of the flag to the point of a breakout, and that gets you all the way down there to $22,000, right? And we hit that, consolidated, and now we flush down. And now what's happened since we flushed down, if we zoom back in here a little bit, you can see we've actually broken the previous all-time high, and this is the first time in Bitcoin history. Wow, it's collapsing even farther. It's down 9% today. It's in a catastrophic liquidation phase right now. We're down to $18,000. It's coming almost down to our double bottom low, right? And it's the first time it's broke down past its previous all-time high in Bitcoin's history. And I told you, just because all these guys were going on their cycles that it's never done it before doesn't mean it can't happen this time. And if you look at what's going on here, uh, this is not good for the cryptos, right? That if this keeps flushing, you could come all the way down this weekend, all the way down to that $13,000 target if the buyers don't come in, as there's a lot of liquidation going on. And this appears to be a critical stage in Bitcoin to where if you break down past this 18,500, which I believe you wicked down to last night, you're going to have a big, big, big flush. And this thing's going to catastrophically flush down to epic proportions. And you can see across the board now, Cardano 7%. XRP is threatening that 30 cent level, right? So we're gonna have to keep an eye on this. And I got a couple of things I got to take care of. I'm gonna get another video out here as soon as possible. Like, subscribe, and share. If you break this critical double bottom in XRP from last night, you're coming all the way down to 28 cents in a heartbeat. Like, subscribe, and share. Peace and love. Peace and love.